Fourth market action today. A great week so far, still holding the green. The VIX is higher. The small caps are higher. But things are under pressure a little bit today. What are you making of? What's your outlook feel like these days?
Yeah, in terms of equities, there's been a great little rally here the last, this is a holiday week, so it's usually a positive week. And I think we're going to continue to see some strengthness into the closing bell tomorrow. Overall, there's a little bit of weakness today. I think the market got a little frothy, and we had that big pop on Monday that was really based on news, which is the Fed coming out saying they've got lots of gunpowder and also the vaccine. And that really created that massive pop in the market. And at one point, we were seeing on the NYSE about 10 shares being bought on the ask, every one being sold on the bid. And that means everybody was piling in. So a little bit of a pause or a little bit of weakness back and forth this week after that Monday pop is perfectly normal. And I think the markets are still holding up. They're in an uptrend here. A little bit of money giving back every now and then is kind of just the way it goes.
Right, absolutely. So when we talk about the market action that we're seeing, you expect some short-term weakness and then we'll be headed higher. I mean, we heard from our administration, I think it was Stephen Mnuchin that was saying, or maybe it was Powell, saying that the third and fourth quarter were looking better. Are you in that camp, that as things reopen, it just won't be as bad as it was, for example, in March and April?
Yeah, I think it's going to be a really kind of a rocky year. It could be a lot more like 2015, 2016 in terms of we're in a big range here, and we might be range bound for a year or so. I think earnings are going to be tough. Businesses are going to struggle. There's all kinds of new fees being tacked on, as you were just talking about. Across the board, employees are needing to get paid more to kind of take somewhat like a danger pay. So it's going to be a rocky road, but I think the market is holding up really well here. And I wouldn't be surprised if we go for a little bit of a double dip in the stock market looking forward. That's a big dip, obviously. But we have seen double dips happen over and over again after we have a market crash to any extent, like 10%, 20%. NASDAQ in 2000 was a 40%. I mean, we can go and see a double dip, and that wouldn't be, it'd be shocking, but I think the market is going to be trading in a big range between the February highs and the March lows. And right now the trend is up and people are still piling into stocks. So, you got to be long the market at this point, or at least being conservative in cash until we get kind of a little bit more of a correction, a little bit of weakness, as I said earlier. And then I think we're going to continue to go up and test those February highs first.
Yeah, it's interesting how you basically sound like you think we're going to be in a range. We might see a little bit of pullback. You said, you'll be conservative with cash, but you'll be invested in some equities. You don't want to sit out on the side, is from what I'm understanding what you're saying. I know you also have a big interest in gold and investing. How do you suggest people do that when you talk about these precious metals? What's your investment advice there?
Yeah, well, every time there's a bear market somewhere or some weak times, there's always another sector thriving. And right now, that seems to be the precious metal sector. Last year, gold broke to the upside out of a multi-year base, and it's been pushing higher all year. It's up about 13, 14% on the year. And the NASDAQ's down, the SP 500 is down about 7%. So the money's been flowing into gold, which is the global safe haven. And just in the last 2 weeks, we've seen money start to flow into the large cap gold stocks like GDX. You look at the big names of gold, and they're all been moving higher because they're a flight to safe haven when times get tough in the equities market. And typically, we see gold start to perform well as a safe haven, and anything related to the gold market should start to rise, and that's what we've seen. So I definitely like the precious metals sector. I think there's a couple little pockets within it, like the gold miner juniors and also silver, that are on the verge of breaking into a bull market, which is going to be really exciting if they can actually break the recent highs and get above that 8-year kind of line in the sand to start a new bull market.
What about other commodities? I mean, for example, oil's having a great month. I know energy is the big laggard today, but are there other commodities or investments that you're interested in? And if it's not commodities, what sectors do you like?
The technology sector's been leading the way, and it still looks really, really strong. There's some laggards in there, like the JET ETF, which are really underperforming. When it comes to commodities, really, to me, the hot commodity are the precious metals sector. I'm not a huge fan of crude at this point. It's had a very strong rally. You can see on the price there, it's at a recent, almost at a recent high. 36 is going to be a really significant resistance zone. And if it can actually break that, then I think we're going to see quite a good rally up to around the 51 mark. That's what the technicals are pointing to. But I feel like crude oil's had a big run. It's just getting into resistance. It may trade sideways for a few weeks, maybe a little bit longer. But I do like crude. It's making higher highs, and it's on the verge of building, I think, a platform to continue to go higher, which will catch a lot of people off guard, because I think a lot of people think that crude could underperform for a long time just because of supply and demand. But in terms of a hot sector, I mean, I think it really is actually precious metals are coming to life. I think utilities could start to do well. They've been building a very bullish formation, ready to move higher, and technology is leading the way.